Hello, this is Brandon Christy from Christy Capital Management with an educational economic update for October 2017. In this video, I'll discuss some of the major headlines that influenced markets in September. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. As we enter October, the third quarter of 2017 is now behind us. While we still have to wait to receive most quarterly data, one detail is certain. Major indexes performed well between July and September. The S&P 500, Dow, and NASDAQ all had positive performance last month and gained at least 3.9% for the quarter. And they were each up 9% or more for 2017. With all of this growth, we have seen the indexes hit a number of record highs, and the quarter's last trading day on September 29th was no different. Both the S&P 500 and NASDAQ closed with new records, with the NASDAQ reaching new heights for the 50th time this year. The Dow closed only down 0.1% from its record high and notched its 8th straight quarter of gains for the first time since 1997. The S&P 500 also ended the quarter up for the 8th time in a row, and the NASDAQ had its 5th straight quarter of gains. Between the recent weather disasters and the geopolitical tensions, last month's positive market performance might seem surprising. But rather than mirroring this volatility, markets were relatively calm. In fact, the S&P 500 had its least volatile September in history. Now, we will look at what happened last month and what may be on the horizon. Right now, before the end of September, we received the final reading of Gross Domestic Product, or GDP, as a critical measurement of the economy's growth. The data showed 3.1% growth in the second quarter of 2017. This reading slightly beat expectations and indicates that the economy is growing faster than many people anticipated. In addition, the latest readings of personal income and consumer spending increased. The services sector also showed growth, with 15 of 18 industries in the ISM non-manufacturing index having positive readings. And after struggling for years, corporate earnings seem to be back on solid ground. Last quarter marked the first time in 6 years that corporate earnings had 2 solid quarters in a row. But the economy still has room for improvement. Industrial production and retail sales fell in their most recent readings. And the Fed's preferred inflation indicator, the PCE, once again showed that inflation is far from the 2% rate that the Feds hope to see. Nonetheless, the Fed has stated that it plans to raise interest rates 4 times before the end of 2018. If inflation remains low, they may have to rethink this plan. One change the Fed will be making is to begin lowering their massive balance sheet this month. During the Great Recession, the Fed plunged trillions of dollars into the economy. The Fed now believes the economy is strong enough to handle more normal monetary policy. So far, the markets haven't had a strong reaction to the Fed's long-anticipated decision to reverse its so-called quantitative easing. But we will continue to monitor this action and a variety of other economic indicators throughout the rest of 2017. Looking ahead, many potential changes could be on the horizon, including tax reform. We are studying how any policy or economic updates could affect the markets. Well, that wraps up this month's Educational Economic Update. If you have any questions about what we have discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 866-331-7749. Once again, this is Brandon Christy with Christy Capital Management and your October Educational Economic Update.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.